following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 21st. Fantastic Friday edition of today's Trader's Edge. I'm host Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Of course, said another way, if you just simply live in your past, there is no future out there. I'm absolutely grateful for your presence here. Hope everyone is having a great day. Let's make sure we do everything we can to have an extraordinary Friday, fabulous Friday, fantastic weekend. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we're going to look at the circumstances of the buyers and the sellers, mostly sellers here, but we're going to go take a look at those. I'm absolutely grateful for your presence here. I'm honored by your presence. I'm here to serve you. So feel free to pick up that phone, dial on it at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. This is fabulous, fantastic Friday, of course, none other than the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 363 points. She's traded at 16,627. S&P down 43 points at 1992. NASDAQ Composite up 114 points, trading at 4763. Russell down 14 points at 1157. The DAX finished off 307 points. The FTSE down 180. Gold's up $7. Silver's down 20 cents. Light sweet crude getting smoked again, down $1.30. A lot of things getting smoked out here. The euro versus the U.S. dollar, that was moving. We'll take a look at that. The Japanese yen, that's pulled back quite a bit. We'll look at everything that we possibly can. It is Friday, and so now the question, I've gotten several emails, of course, and thank you for sending emails. Everybody's asking the question, is there going to be a bounce? What's going to, where are we at? Well, let me answer those questions. First, let's identify some patterns that are unusual, I suppose. Now let's take a look at the weekly charts. Let's just take a look at all the messages, try to cover the different time frames. Those asking for a bounce are asking more shorter-term time frame. If we take a look at the VIX index itself on its own, let me put this chart up on my screen. This is not really a chart, right? This is just taking a look at the VIX cash index. That's the line at the top there, trading at 2420. We can see it's up 26% here today. And down below it are each of the futures contracts. Those of you that trade the UVXY as an example, you're not really that interested in what the cash VIX is at. You're more interested in what the current two contracts, the Q contract. So what is that, August? I think Q is August. Yeah, Q is August. U is September out there. That's really what you're interested in because that's what is the underlying instrument with inside that vehicle. But really what I want to show you is see how this is trading at 24.19 and all of the VIX futures contracts. 24.19 is way above. The highest futures contract is the one that is in April of 2016. It's only traded at 1914. Number one, most important thing is that this is really unusual. You talk about Freaky Friday. I don't care whether it's option expiration or not. This here is extremely unusual. This is a setup for the market is going to bounce. And it's going to probably be a very sizable bounce when things get this discombobulated out here. So that's the message of the VIX. The number of times that you see this type of pattern out here, it's a handful out there. I'm not going to go back and give you all the dates, but it's a handful. Certainly the market is a handful, or can be, but this is a handful. So that's one message that is out there. And take a look at the VIX index. If we look at the summation index out here, and I want to go take a look at the weekly charts, but what I want to first do is take you back, and let's take a look at the NASDAQ Composite. We want to do that for a couple of different reasons, but one, what I should have done is turned a lot of these things off. Let me see this. Can't turn really everything off out here. That'd just be too much work for me. But what I can do, let me turn off that line. Okay, summation index. What you're going to pay attention to, I'm going to take you back a long time on this chart. You see where the Nasdaq Composite right now, where its price oscillator is priced at minus 65.08. Minus 65.11. Minus 65 is like a magic number out there that we want to watch. And to prove the point here to you, because on a day like today, what you want to do is you want to be taking a look at chart, what you and I are. What in this, you can see this takes you back into the 1996 timeframe. So we're going to go back a ways out here. So I just want to be able to put this together for you to understand what the markets, at least what the message of the markets very likely is. Now, as we take a look at them, and we're going to take you all the way back. It looks like I'm going to start you off back here in 1998. Okay, so that's far enough. And that way, we're going to catch the number of times where the Nasdaq Composite price has gotten down to that level, or below that area, and then take a look at what the market behavior is, really, right? Because that's really what it's all about. So if we come back here, I'm just going to start right here, October 8th, 1998. The reading was down at minus 61. What took place out there? Actually, it was a fairly significant bottom. Now, that was a October bottom. That would be expected, right? What you and I know, unquestionably, is that the market trades down into October. The majority of the time. Not every time, but the majority of the time. Is it going to this time around? At this stage of the game, I have to say the answer is yes. And we'll take a look at all the other signals out there. If we take a look at the next time that we saw the Nasdaq Composite down here, let me just widen the screen for you down to that minus 65 level. It was back here in 2000, April 4th in 2000. And of course, you saw a few day bounce out here. So when I say bounce, the question has been, I think some people are on the wrong side of the trade out here. And I think that's really where the question comes from. We also saw that price oscillator make a low on one single day back on April 14th. There was a bounce that got down to a minus 84 type reading out here. If you take a look at October of 2012, you saw a bit of a bounce for a number of days out here. Again, we're just getting back into these levels here where you see minus 65 or lower. September 21st, 2001. That actually set up a fairly decent bottom out here, a fairly significant bottom. Of course, that's moving in towards that September time frame, right? September 21st, September, October, November-ish, where you're looking for a bounce. Well, that certainly set that up at that stage. And look, I guarantee you there was as much fear back then, fear, so to speak, with regard to, it feels like people are using the word correction on media all the place. It actually kind of drives me crazy because, I'm not even sure if we, where'd that come from? Correction. You and I, we take a look at between swing points, and we know that a natural move is a 61% retracement. So I would have to say, I wish they would just start using the word retracement, because that's what's gone on so far inside of the market out here. Now, as we pull this, that's just my own thinking. As we pull this back further, you come back into 2003, back in September of 2003, you can see you had a bouncer bottom inside the market. If you come back, we're going to get to May of 2004 out here. We had about a 5-6 days sideways move. So you see, the whole point is that we're going back in time. Let's come back into the 2005 time frame. You'll see a nice significant bottom back in October 2005. So that doesn't surprise you. Let's come back into a little bit. Let's try to get a little bit closer. Let's get into 2007, right? A lot of people saying, hey, this is like the 2007 top. Well, if you come back and you take a look at the price oscillator back on November 20th, 2007, you saw the market actually move sideways for about 4 or 5 days, then make a fairly decent retracement up into probably a 200-day exponential moving average inside the Nasdaq Composite. Back down here in March of 2008, price oscillator gets down to that level, and a very significant bounce ensued there. Same type of pattern back here in July of 2008. So you see, I'm not being, when we take a look at this stuff, sometimes people think that, hey, maybe my sample size or what I'm showing you is maybe just what I want to show you. BS to that stuff, all before Steve. I come to this game each and every day, regardless of what side of the trade that I might be on. or anything, and just simply provide you with accurate information so that it can assist you with regard to your decision making and where you're at. Hey, if you're short, I'm not saying get out of your short position, but what I'm trying to do is help you to say, hey, this is what the charts, most people are on television, they don't know what the markets are doing, where are they going? That's really the question out here, right? You and I, it's a whole different story. You and I are like MacGyver. We're like, who is it? Sherlock Holmes, right? On, what is it, 222 Baker Street? I think it was something like that. I actually visited, if it was 222, but I've actually visited Sherlock Holmes' place out there. You and I are just like Sherlock Holmes, looking for clues and patterns to understand what the market is going to do. Okay, so that's the daily chart out here for the NASDAQ composite. Same patterns really in the New York Stock Exchange is stretched even further than the NASDAQ composite. The same thing inside of the Dow. So that's on the shorter term basis. We took a look at the VIX index, very unusual, extremely unusual. Second day in a row for that out there. That's going to correct itself. So look, if you're sitting on a ETF and you've made extraordinary gains inside the VIX ETFs to the long side, whatever they are, really tighten your stop out there. Doesn't mean that Sunday, Monday can't be another type of day like this out here, but you're really starting to gamble with some good possible earnings out there, gains on your trade. So that's two things that we took a look at. Now, let's go take a look at a little bit longer-term picture, and let's actually stick with the composite. So let's take a look at, I'm going to have to switch charts. This here starts, and we're going to go take a look at the S&P, the Dow, composite, and the New York Stock Exchange, just to break it down. Since it's a weekly chart, we're going to go ahead and actually start with our weekly charts. But we're going to start with the NASDAQ composite out here. We'll put that up on our screen. And as we take a look at it, the very first thing that we want to look at is trends out here. Very simple thing. We're going to go take a look at the trends. We're going to draw a trend line. Here is the actual trend line off of the October 2011 timeframe, which in my opinion is a very significant trend line. You can see the NASDAQ composite is nowhere near that trend line, maybe headed there, but nowhere near that trend line. If we take a look at this trend line, this is probably where it's really headed to. So we just took a look at the NASDAQ composite, where price is likely to bounce. And what you and I have just done is we have gone ahead and we've drawn in a trend line, which has not been broken inside of the NASDAQ composite. Now, the last 2 days have just been nothing but misery for the NASDAQ composite, as well as other things out here. But we take a look, and this says that the NASDAQ composite has a little bit further to go. So if you put that together, and I don't know how the day is going to end. Look, if the day ends with a fairly decent recoup of today's losses out here, then that price oscillator is not going to be down to the minus 65 level. So you and I were taking a look at a 119 in the afternoon. The deal is that price oscillator really has its meeting come 4 p.m. out there. So again, it all is dependent upon how the market closes. Either way, though, I would say the odds favor probably a test of the NASDAQ composite getting down to that trend line. That trend line, the October lows are where we're taking a look at, and we're also coming back here into the November 2012 timeframe. Price-wise, it's probably like 46.99, 4,700, somewhere right around there. Steve Rhodes with TFNN. We'll be right back, and we're going to go ahead and continue to bisect and dissect the markets. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off, I don't know what the Dow, the NASDAQ composite up 101 points. But we're taking a look at the composite. She's trading at 47.76. So we take a look at the trend line. That trend line, by the way, is muy importante because once and or if that trend line gets broken, then price will fall to the next trend line out there. That really becomes your target. But that's diagonal. Levels of support / type resistance. If we take a look at horizontal levels of support and resistance, what you're going to take a look at is you're going to see our sideways trading ranges out here. These are the weekly sideways trading ranges out here. So we know that price inside the NASDAQ composite, when we took a look at its price oscillator, every time it gets down to that minus 65 category, you see some kind of bounce. It could be a huge snap. I can't tell you to the extent that you're going to see that snapback, but you get something that takes place out there. That's what's really important to notice. We know that the trend has not even been broken in the NASDAQ composite. And price has now moved down to a horizontal trading range boundary line. Little dash lines out there. Those are the midpoints. You really take a look at, and these are areas of horizontal support or resistance. In this case here, we're going to see a 47.3986 to be exact, and we're not really looking to be exact out here, whether or not that level holds its support. So we're taking a look at a couple different areas of potential support or what the market does inside the composite. And that's what we've got going on there. Let's go take a look at the S&P 500. Let me go ahead and turn off all this NASDAQ composite stuff. Give me a moment here to do that. This chart, this page that we're looking at, I've actually got all 4 of these on one page, but it gets a little bit too cumbersome. So we'll start here, take a look at the S&P 500. We're going to do really the same thing just so that you can understand, because that's a little different message here on each of the charts. If we look at our trend line, here's our trend line coming off of our October 2011 area. This is a weekly chart that we're looking at, unless we see the S&P 500 close up around the 2022 level. And if it does that, what you'll know is that the trend is still in place inside the S&P 500. Yeah, even with about a 100-point move off of, down from where it opened on Monday, somewhere right around there, right? Or the high on Monday. You're at 1996. I don't know where price is going to close, but what I do know is if price closes back up above that trend line, and you can draw these at home on your system out here, so it's one of the reasons that I'm sharing this with you, then it will not have broken the trend. So the end of the day is going to be important inside of the S&P 500. I know wild, and people will be like, what? So now, because it is broken as we speak right now, and on any bounce, price is going to try to get back up inside it, right? The old support will become new resistance. Let's assume you close right here. That's not very hard for it to do. If it can't get above that, that will deliver an important message. Likewise, if we take a look at where price is likely to then fall to, all right, it's going to be our other trend, the trend coming off of really the March 2009 level. And that's down quite a ways. If you were to take a look at, approximately where that is today, it's around 1690 or so. So in the 1700 range, if in fact price, because one level of support gets broken, price will move to the next level. Now that's diagonal levels of support that you and I are taking a look at. Let's go take a look at the horizontal trading range boundary lines out here. What we can see is at 1954, that really becomes our next level of support on the weekly chart for where the S&P ought to be able to find support out there. So it's around the 1954 level. If we go take a look at, let's go look at the Dow, so I can give you some price points for the Dow out here. Let's turn all the stuff for the S&P off. There we go. Inside the Dow. Now the Dow looks a whole heck of a lot worse than the S&P 500. Then certainly the NASDAQ composite. The Dow has broken its trend, and it's broken it, pretty significantly. Really wide-ranging bar this week. I don't know that anything can happen, but that would be one heck of a move. It'd have to reverse all of the losses for the week in order to get back above its trend line out there. So last week closed into the trend, it rejected it, it closed back above it. This week you're down below. So what does that say? Trend line where the Dow is likely headed to? Just come take a look at that trend line off of the March 2009 level. It's really not, and then as your next touch point, you're just simply using October of 2011. It's not that much further below where we're at. It's probably around 16,275 or so is that number. If you and we start to take a look at the levels of horizontal levels of support out here, right at 16,109 is where the Dow would find its next level of support, which is right into that trend line. That should be pretty major support inside of the Dow. Looks like the New York Stock Exchange is going to have to wait until we get back from this breakout here. But I will tell you this, and this is a dangerous thing inside of the New York Stock Exchange. Come on, where's that trend line? Is that it? No, that's not it. Is that it? No, that's not it. Is this it? There you go. You're trading below 10,387. That's a problem for the New York Stock Exchange. That's the highs in 2007. Steve Rhodes, we'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now, Dow is off 330. S&P is down 38. Composites off 98 points. Let's go back to take a look at the New York Stock Exchange. So the New York Stock Exchange broke out of this very long-term consolidation pattern. That was by taking out the 2007 highs out here. And it actually took them out back around April of 2014. Price came back and tested it back in October of 2014. We actually saw price get below those lows out there. And the reason why we're paying attention to that is because anytime you get below there, when a consolidation breakout fails, says you can go all the way back down to the bottom. No. I'm not saying that's where it's going out here. We have to take a look at different levels of support. So let's go do that. But it is below 10,387, and that is a problem for its chart patterns out here. If we take a look at trend lines, we know this. You and I took a look at this last week, and what we know is that the New York Stock Exchange was the first one to, well, I can't say that. I have to go back and look at the Russell, but it might have been, I think it's the New York Stock Exchange. Either way, the New York Stock Exchange broke its trend line last week. And really just was closing right on it. This week, you've broken that trend line with conviction. So where do you fall to? Same setup out here. We just simply go take a look at the trend line off of the March 2009 level. That takes us down actually below the October lows out here. So, or at least to that area of 98.86. So the message inside the New York Stock Exchange, back below 2007, you broke the shorter-term trend line, if you want to call that, from 2011 out here. Price likely moves back in, tests the bottom of that trend line. Now, it doesn't have to do that, Monday, Tuesday. It just and if price gets above 10,387 out there, you're going to want to watch the next time down below that 10,387 number, you'll know where price is headed to. If we take a look at levels of horizontal support, what you'll also see out here at the 99.85 level, that happens to be on a weekly basis. These are not market profiles. These are nothing more than take a look at 17, 18, 19 years worth of data and identifying the largest number of opens and closes on the candle base. I'm not interested in the wicks of the candle, just the body of the candle, which is the essence of price, and looking for the largest number of co-located. Doesn't matter to me whether it's an open or a close out there. Those prices, by the way, are at the 67.47 and the 83.65 level. So 99.84 is really the price objective for the New York Stock Exchange. So that covers those four. I did mention the Russell 2000. Let me, I won't add it here because that would be a slight nightmare. Let me just go back. Let me go back to my main page out here. Actually, I was taking a look at Walmart. You and I were talking about the consolidations. In the case of Walmart broke through its consolidation level really back in February of 2013. And when you break a consolidation, which was basically a 30-point, 29-point consolidation, you could have added 29 points to 70. That becomes your target area. Well, which would have taken you up to about $100. And in the case here of Walmart, it was on its way to doing that up until about January 2015. Price is now back inside the consolidation. Where's Walmart likely to fall back to? I'm just looking at a long-term trend line from 1997 out here, and I would say Walmart is probably headed back into the $60 range. You're at 67.42. I'm really speaking of 60, like 60, 61 type of a level is where Walmart is likely to fall. Now, if Walmart breaks through that level, $40. 41, 44-ish is what's really on the table for Walmart. But let's go take a look at the Russell 2000. We can do all this stuff manually out here. Oh, okay, great. We already have a trend line out here. So as we take a look, and this is off of the October lows. Well, I'll be a son of a gun. Hey, thanks for asking me to do that, by the way. What's it mean to even be a son of a gun? Do you know? Let's get rid of this. I don't know what that level out there, that 1180. So this is interesting. The Russell 2000, I saw something pass by my screen out here, said that the Russell 2000 was officially in correction territory. Do those people at CNBC have a clue? Do they just read the prompter? Is that all that they really do out there? Retracement. We have a retracement that is going on. In the case of the Russell 2000, it hasn't even broken its trend line. From right, retracement. You try to buy corrections then, right? You try to buy a 61% retracement out there. Boy, you talk about trying to sell fear out there. Not here. Not what we're going to do. Yeah, I know that 10% definition. That's hogwash. It's who came up with that? 10% is a correction out there. In any event, let's just take a look at, let's just stay on course here. Let's take a look at what we do know about the Russell 2000, which is in correction territory. It hasn't even broken its trend line. I'm not saying that it's not going to, but let's be real about it, okay? You've got the trend line out here coming off of the October 2011 low, off of the November 2012 low out here, off of the low from October of 2014, and prices really just run into a trend line. If it breaks that level, then where price is going to likely fall to is the next trend line out here. Let's go ahead. We'll make that a little white arrow out here. And so that would take us down into about a price point. But take you down below the October lows out here. Those lows are priced out at 10,040. So take you down to probably about the 1,000 even Steven area out here as well. So at this stage, the trend actually has not been broken. So it's really the New York Stock Exchange and the Dow that are the two most miserable indexes when we take a look at trend lines that have been broken. So there's the battle that's going on. You got the New York Stock Exchange, a wide swath of the market, which when you and I take a look at it, we know just simply by taking a look at that price oscillator, which right now is down at minus 210 level out here. When was the last time we were down at minus 210 area? You were minus 257 back in December of 2015. And what happened in December 2015? You got a pretty nice, healthy bounce out here. Now, that could unfold, by the way. If you see that type of bounce, that would take the New York Stock Exchange all the way back up to 10,863. Out here. Is that what's going to happen? I don't know. I can tell you that this market has been stretched to the downside big time out here. And as you and I know, we went back to what? I don't know, the 1990s, or we went back pretty darn far when we looked at the NASDAQ composite out there, just to be just really objective with regard to what actually takes place inside of the market. Okay, so that covers, I think, hopefully that gives you a really good feel, and I have answered all the different email questions about, hey, what's going on with regard to the market, and using really a set of tools that you're able to use at home as well out there. So let's go take a look at some other things that are moving. Let's go take a look at Goldilocks. Talk about trend lines. Look, this is as important as anything to be able to use trend lines. Now we're taking a look at the December contract out here, and we take a look at trends. This is the weekly chart. I'm going to put the daily chart back up on my screen for you. So we take a look at this. Here's some trend lines out here. This is an important trend line inside of gold. So gold is either at or very close to a significant level of resistance. Now that's coming off of the high here. So here's the deal. If you're going to use trend lines, you're going to use for support and resistance, just like you and I were doing so on the indices. You got to use it. Well, you should use it across the board. So inside of gold, we've had one heck of a nice move, right? You know, my clients and I, we picked the bottom in gold. We didn't get the exact tick, but we got pretty darn close to getting the bottom inside of Goldilocks. And now what you and I know is that gold has hit the top, or is very close to the top of the trend line from the January 22nd high out there. That was priced out at, what, 1309, hitting the top of this level out here on May 18th. That was out at 1234. And so for gold to really change its trend, and that's not even the longer-term trend line, but this is a good enough trend line out here. I'd have to go to the continuous contract to put the next trend line out there. So it's really running itself right into a resistance level. Overnight, we saw a nice pop inside of gold. It was up another 13, 14 bucks or so. Actually, the actual high was 1167. You're at 1159. So actually, it was only up about another $8 or so from here. There's another trend line that it has broken, much shorter term trend line. That's the green one. So you break one trend, you go to the next out here. In the case of gold is also about to make, or has made, a 0.618 retracement. 1172 would be the exact number out there. So that's a level of that's a correction, right? You know, 6.8. It's a retracement. You know, so that's a retracement out here. We've also got A to B equals CD that has completed. Now the one. Now this would tell me that if in fact gold can break through this trend line out here, which is right at the 1 to 1.272 A to B equals CD, and really when I look at this chart here, the message at this stage of the game is that it wants to do it. It wants to get over that wall out there, and when it does, price probably moves all the way up into that 1200 area. Price probably gets all the way back here to the May 18th level. Let me put the continuous contract out here, GC # F. Let me put that, and let's go take a look at an even larger trend line out here, because again, as one area gets broken, price will go down to the next. So let's go ahead and put this trend line. This comes back all the way to the March 2014 level at the 1300 area. That says, so interestingly enough, that takes you up into that 1245-ish type area. So gold, very important, should be on watch out here. If you're long gold, my suggestion is just simply manage your stops out there, manage your trade. Know that the silvery, the shiny metal is up against a fairly stiff area of resistance. Not that it can't be overtaken, but it is up against some stiff resistance. If we go take a look at what's going on inside the currency market, let's go take U.S. dollar getting a little shellacking out here. We take a look at the euro. The euro out here versus the U.S. dollar, we can see the rising bottoms. We can see the higher highs. Price likely to head back to that little channel out here that it had broken out of back on the trading day of July 1st, 2015. It's not really that much higher. Gets you into about the 114, 115 type level out here. If we take a look at retracements, the retracement from the high of May in 2015 down to low out here, you can see you're past the 0.786 area. So very likely 114.66 is in fact where the euro is headed to. If we take a look at the Japanese yen, I trade out of 122. That's actually running right into a level of support out here. And that is another trend line. We'll go ahead and turn that up. So here is the green trend line. That's coming off of the lows. We're taking a look at the Japanese yen. That's back to the April 30th level. So prices run right smack dab into it with a wide-ranging bar, which, by the way, that's how it formed the bottom of this rising trend line back on July 8th. It did hit it with a wide-ranging bar. If it breaks through that, price runs all the way down to the 118 type level. If it breaks through that, it'll run all the way down to long-term support of that rising price channel. That would be a heck of a nice buy inside of the Japanese yen. That's in the 115 area. Not saying that it's going to get there. We know that there's levels of support that it would have to go ahead and break through. If we take a look at some individual stocks out here, let's go take a look at some of those. Let's look at Apple, down 450. It repaired that window of support that you and I were taking a look at yesterday. That was created by that nice gap up from the trading session of January 28th. Price broke through that today. Volume so far is 76 million shares. The next swing point on the way down has only got 78 million shares. So that is not a good sign for Apple. In the case of Apple with that island top, if it breaks down below 104, that's probably like its next target area in the 104. So another $4 down to the downside out here. Okay, maybe it does get down into the October area, down in the 95 type dollar area. If we take a look at ExxonMobil, now this is an interesting potential trade setup out here. You and I have taken a look at this. You're down today. 73.13 is the number. Looks like you've got still, you're down with less relative weakness to the downside out there. But there is a little bit further for it to go. Let's put this on the monthly chart out here. ExxonMobil, boy, take a look at this, getting right down. Now, I'm not saying that this level is going to hold, but and this was certainly what I would have loved to have seen come October. But we're not going to get that. We're not going to get that gift out there. And that doesn't mean that ExxonMobil can't find a bottom while the market continues to further retrace out here. But right now, right in this 73, 72 something area is where ExxonMobil is scheduled to hit the bottom of that price channel. Now look, ExxonMobil is stronger than Chevron CVX out here, which has broken through its rising price channel. So there's no reason to lay heavily on the belief that ExxonMobil won't do the same out here, but it is nearing. And if it breaks through that, I know there's a lot of folks are looking at ExxonMobil from a long-term buy standpoint out here, and then you just may have to. First, we got to see what happens when price gets down there, and can it really trade in the opposite direction of what the markets are likely to do for the next 6-7 weeks out here. That would be the normal pattern, taking us down into October, with this trade against the trend out there. I don't know the answer, but we know a level of support that we're going to continue to watch out here. If we look at the couple sectors inside the S&P 500, the XLF, let's go take a look at the financial sector. This is the monthly chart. You don't want to look at that. Let's look at the daily chart out here for the XLF. She's testing her hammer candle from July 7th, which has 51 million shares, and you're doing it with volume. You're at 46 million shares at 149. That level's held so far, which is 24.13. Now you're at 24.12 as we speak right now. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
So, folks, Dow's off 316, S&P's down 37, Composites off 94, Russell 2000 down 3 points. Is that right? Is that right? No, it can't be. Yeah? So Russell 2000 is only down 3 points? What the heck? What's going on with the Russell 2000? It's in correction mode out here. Oh, that's really interesting. Is that really? I don't have a bad feed, do I? Let me take a look. No, son of a gun. Wow, I wasn't paying attention. Were you paying attention to that out there? That's very interesting. Let's go take a look at the indice that is supposedly in correction territory out here. It's almost back to flat, which goes with one of the questions that came in. Can I find anything on my charts that say that the bottom is here? In the case of the Russell 2000, right now it's trading back into this candle session here back from February 2nd. So that's interesting. That was the last time we had a sign of strength out here in the IWM, a little bit. Junior sign of strength, February 3rd, that little gap up out there. It's coming down with volume. The volume back there, 44 million shares. You've done 48 as we speak. Whoops, don't mean to keep drawing these arrows out here. Line, we turn that off. That's really interesting. Somebody says that the Russell 2000 futures contract went positive. Let's look at the 30-minute chart out here. This has a little bit of a delay, but if we go take a look at these 30-minute charts here for the Russell, the Dow, Nasdaq, and the S&P, we're going to see the same thing. So this is interesting. So as the forget about the wave counts out here, we can see that his price was pushing lower inside of the 30-minute chart here for the Russell. Had a little hammer candle that formed at 11:30. At 12 o'clock. You had a nice big confirmation with the bullish engulfing out here. So you can see that the plunge protection team or somebody is out here protecting the lows inside the Russell 2000. Nothing but bulls here that are showing up around it. And on the 30-minute chart, it's about to try to take out its TAS market profile high of 1168.50 out there. So that is a level of resistance. If it can close above that, that would be fairly impressive out there. So yeah, so my eyes were not seeing things out here. With regard to, let me show you the other charts out here just to answer that email question. You've got really the same kind of pattern. Here's the ES. There's no delay on this screen. This formed a little piercing candle out here with price moving lower with less relative weakness. You need to see a higher close as we come into the 2 p.m. It looks like we might have just by a few ticks, but that's promising. I'd say it's got to get above 2003.65. If it takes that out, shoot, you could be looking at a bounce of 2021. Hey, even by day's end, it is possible to see that happen. If we go take a look at the NASDAQ out here, in the case of the NQ, you can see the same kind of thing out here, price moving lower on the 30-minute chart. You have a nice little bullish engulfing candle that occurred here at 130. You're not getting any follow-through inside the NQ. I think the NASDAQ, which is the stronger of them all, even then when we take a look at all the trend lines and everything out there, the NASDAQ composite is still the strong dog out here. You'd really like to see the signal here versus in the Russell 2000. Russell 2000 is not going to go ahead and be able to carry the markets higher, but it's not that it's a negative sign out there. And then to wrap things up here, let's take a look at the Dow futures. So on the 30-minute chart, you can see same consistent pattern across the board out here. Look, what that says is if you're going to attempt a trade to the upside, make your stop below those lows out there. And I mean make your stop. It gets down there, it gets hit, you go ahead and you take your medicine. You can always fire away again. Just simply do it with a clear head. So, folks, have a fantastic weekend. Hopefully, I've been of assistance to you. Thanks so much for being here. Stay tuned. David White is up next. He's that lovable, squeezably soft, charming guy out there. And I look forward to seeing you come Monday. Hey, have a great weekend. Thanks, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.